What's going on today, people? Happy Tuesday and welcome to this edition of a little real estate ride along. My name is Jameson with Fathom Realty out here in Colorado, and today I'm going to talk a little bit about capital gains tax. So capital gains tax is something I think makes a lot of sense to talk about right now. We've seen some of the highest housing price appreciation and value appreciation over the last 2 years than we've seen basically in history. And a lot of people are wondering what that looks like if they were to sell their house and how they would be taxed on the proceeds. In its simplest form, capital gains is just the tax on the net proceeds of the sale of any asset. So for all intent and purposes, our case, or your home. So if you were to sell your home and you bought it for $500,000, sold it for $650,000, made $150,000, capital gains tax would be assessed on whatever that profit margin is from the purchase of the house to the sale of the house. However, there is a standard exemption that everybody can take advantage of as long as you've lived in the house for 2 of the last 5 years as a primary resident. The exemption is as follows. Basically, if you were a single homeowner, you can be exempt from up to $250,000 in profits as long as you have lived in the house as a primary residence for 2 of the last 5 years. If you are married homeowners, that exemption goes up to $500,000 as long as you lived in the house for 2 of the last 5 years as your primary resident. So what happens if you've only lived there for, let's say, a year and a half, right? In this market, in Colorado, Seattle, Boise, you pick any hot market, a lot of people have made a ton of money in capital gains from their houses that they may have bought less than 2 years ago. So the general consensus, and from people that I've talked to, they assume that they have to pay taxes on whatever they make off the sale of their house. So if they've made $160,000 and they've only lived there for 13 months, they would be on the hook for getting taxed that $160,000, which is actually not true. So the way it works is that capital gains is actually prorated. So as long as it is your primary residence, what you do is you take whatever that exemption is, whether it's $250,000 for a single homeowner or $500,000 for a married homeowner couple, and you divide that number by 24 months. So essentially the 2 years, and you get a monthly prorated amount. So it comes out to, if you do the $250,000, it comes to about $10,400 per month. You then take that and you multiply it by how many months you've lived on the property. So if you lived on the property for 13 months, that total comes out to $135,000, which means that if you bought your house for $500,000, you sold it 13 months later for $650,000, and you made $150,000, you are not getting taxed on the $150,000. You are only getting taxed above and beyond that prorated amount, which in this example is about $135,000. So $135,000 of that profit is yours, free of taxes. Anything above and beyond that, in this case it'd be about $15,000, you would be liable for any capital gains tax. Same calculation goes if you are using the $500,000 calculation, it goes up to $20,800. You would then multiply that by however many months you've lived on the property, and anything above that total that you make on the sale of the property, that means you are on the hook for capital gains on that amount. Why is it important? Because in Colorado, specifically in Denver, we've seen houses that have been owned for less than 2 years that have appreciated more than $150,000, $200,000. And a lot of people are hesitant on putting their house for sale because they don't want to be on the hook for capital gains tax. But hopefully this information shows you that that is not actually the case. And you can still walk away with a lion's share of that profit not being taxed. As a final disclaimer, I am not a CPA or a certified tax professional, so always, if you guys have questions on it or you want to get more in depth, please talk to a financial advisor. Otherwise, hopefully you guys found this information useful. Like and follow if you guys do want some more tips or any sort of information like this, whether it relates to the housing market, buying a house, selling a house, anything like that. Feel free to reach out to me as well, and hopefully you guys have a great day.